and investors, especially investors, because I have one of the best with me today, Tavi Costa from Crescat Capital, chief market strategist. You could find Tavi on X doing spaces where thousands of people want to hear what he has to say. And when it keeps going like that, it's because his content is elite. So great to be back with you and having you here, Tavi.
It's my pleasure. Thanks for having me, Coach. Really
All
looking
right.
forward to this.
Yeah, and my nickname for you is the Silver Baron when because you went out and not just did the easy stuff with clicking your mouse, you went out and bought physical mining properties,
Yeah.
and people were trying to talk you out of it when silver was 20.
Yep.
And they go, oh, it's Tavi, silver's, could go to 15, 10,
Mm-hmm.
and you had conviction, and your conviction continues. And why don't we start with this beautiful monthly chart?
Mm-hmm.
You put out some, so follow Tavi on X, add Tavi Costa, because you're going to see some great technical work. So we had this little pullback a couple weeks ago, and people felt that maybe a correction was underway. I still think it's possible. I think a lot of people don't think we're just going to bolt to new all-time highs in gold, and maybe silver doesn't. But the gold-silver ratio is really almost parabolic to the downside. But I'm looking for a low in the gold-silver ratio, which kind of gives me pause a little bit here. But this cup and handle, I haven't looked at it for a long time, but the cup was started at $3.
Mm-hmm.
Where were you in 94 when silver was $3, $4, $5?
I was in Brazil. My dad was going through a inflationary problem back home with the Brazilian currency being restructured. Funny story, my dad, during exactly that year, purchased right before the government basically made some major moves in terms of the currency, purchased a motorcycle. He has no investment background, purchased a motorcycle to protect his cash balance that he had, which wasn't much, and ended up making about 3x on that trade, selling it maybe a week after that. Just
Wow.
because of the restructuring and the inflation problem. It's just people don't think about these things happening and being born in a or raised in a emerging market. I think you learn a lot and appreciate a lot about hard assets.
Yeah.
By no means I'm a gold bug. I'm just I believe in sound money and all these things, but you know first and foremost, I think we need to have our principles of macro and value when it comes to investing. And there are moments where you want to buy gold. There are moments you don't want to be buying gold. But it gave me a lesson about what gold really means in an environment that we
Yeah.
saw back in those
And
days.
you know what? That's a traumatic thing to watch your family go through that and all the people you knew
Yeah,
to go through a currency devaluation where, most people think it was only happened in Germany and the
yeah,
Weimar Republic. They hear stories of a wheelbarrow full of cash and the thief would dump the cash and run off with the wheelbarrow.
yeah.
Didn't because it was worthless. So, you know, people don't think it could happen in America.
Well,
But there is some restructuring talk. The debt is, we either continue to inflate out of it and silver goes to 300, or there's some type of new plan for, like you said, restructuring. Do you think the U.S., especially with an unconventional leader like Donald Trump and Besant, are up to something that they have a plan using precious metals, maybe using crypto to make the debt load less and take the pressure off the U.S. government and put the pressure on U.S. citizens as their currency goes to stable coin?
yeah. No, I don't know about the much about the stable coin angle as far as how it plays into this. Of course, about the demand of treasuries and all that. I get that, but to me, there's a much bigger endeavor, happening under the radar. And I do think there's a restructuring of the debt occurring. I mean, you can see the data that hasn't been reported by a lot of people, but the UK in the last 7 months purchased about 100 and I think it's $180 billion of treasuries. All you see the reports is that people are selling treasuries, but instead we did see a major purchase by the UK. Also saw Spain purchasing its largest monthly accumulation of treasuries in its history. And so there's something happening here that we don't know yet what it is. And I'm not going to pretend I do. But from my understanding, the US has to adjust its interest rate problem. That problem is not as severe as it may sound. It becomes an issue when you can't service the debt any longer. And when you look at globally, the debt, the service ratio that we're paying here in the US relative to the other parts of the world are almost double what we see in a average size of the economy that we see in Europe and other places. And so I think to go back to the global standard, if you will, of that service ratio for its government leverage, I believe that that's going to come at a cost. And the cost is that restructuring we're talking about is through either accumulation of gold, it's through revaluing gold much higher,
Yeah.
and or also depreciating the dollar, not just versus other hard assets, but also versus fiat currencies as well, which is a way to also fix the second big deficit issue, not just the physical side, but the trade balance side, which we're running a very steep deficit right now. So you put it all together, to me, it's just, I don't get into acquiring a mine or acquiring other mines because I have a view on gold for the next 12 months. No, I have a view on gold for the next 10, 15 years.
Right.
And, if you're of that type of financial planning, I think that's how you behave. But of course, I have my days when, my family members and friends are calling me asking, why am I not buying gold? Should I be buying gold right now? But and those are moments where you're going to see some level of volatility, but I don't think it changes the big picture here. And so I'm extremely and there's a few opportunities, kind of like what we saw with gold a few years back, that are presented in the markets right now that I find it incredibly interesting, that not a lot of people are talking about either.
What, Tavi?
I teed it up. Sorry.
Yeah,
Well, I think oil is one of the most interesting
I was going to ask you about that.
opportunities I've seen in a long time.
Okay.
Market presents these ideas every now and then, and people will come up with all of these different explanations of why oil prices will stay where they are. We know positioning is low. We know everyone is bearish. And when you talk about, and folks usually say, well, look, what we're going to see here is potentially, reflection of the economy actually deteriorating, causing oil prices to fall. Has anybody looked at copper prices at all? And it's
Yeah,
funny when,
copper. Yeah,
yeah, I mean, if you looked at oil versus copper, copper is clearly pointing to a different direction.
sure is.
If you're concerned about the economy, why is copper not going higher? And then people would say, well, because there's a shortage of demand. Why there's a shortage of demand? Shortage of copper
Supply. Yeah,
supply. And oh, because we're building and we need it. Well, if we're building, we're growing the economy. So the economy is not collapsing. Otherwise, copper would be seeing a pretty large damage on the demand side. I'm very long copper, but I think through history, what you learn is that gold moves first, copper moves second, and thirdly comes oil. And I don't think people are understanding this very well. And it's very usual. If you look at the resilience that we're seeing across most of the energy companies today, it's remarkable. I think we're about to see some pretty significant changes in that regard. We're probably going to see, usually when the energy equities relative to oil reach levels that we're seeing today. In fact, it's just as as severe as we saw back in '09 at the bottom of the market, it does not mean that oil, it means oil should also outperform energy equities, but also on top of it all, it doesn't mean energy equities should do bad. Actually, they do incredibly well during those periods as well. So it's almost like an exhaustion barometer of the market where everything has been reflected in the oil price, but people that invest in the space are just so done with that story, the bearish story, that they start buying energy stocks because they clearly see that these companies are making money. And so I'm very bullish energy
Uh,
overall.
I can
And
imagine what the gold oil ratio looks like or the silver oil ratio looks
oh,
like.
it,
It's got to be like dropping off the bottom of the screen.
oh yes, I mean if you're an energy company in the mining space and you're not hedging your energy cost, it's almost criminal not to do that. I mean it how long you think we're going to see that ratio that you referred to?
Yeah.
And I don't think it will take long until that ratio turns. And I'm not necessarily bearish on metals. I am just, exuberantly bullish on oil. And nat gas is the clear story. So, you can
Yeah.
buy an energy company where they has some nat gas exposure. But even the EIA now it's coming out with outlook for nat gas demand expansion to be much higher than what used to be in the past. So be aware of that too, because it's not a it's you're not looking at a contrarian take here. I love I'm
Yeah.
not trying to be contrarian all the time. Like gold is not a contrarian view here, let's be honest. But
Right.
but there I have to acknowledge when I see a contrarian take that is clearly not reflected on prices and people are just unjustifiably, in my view, bearish. And if you looked at the equal weighted index of commodities, I'll post that chart later on X versus
Okay.
oil. This has been one of the largest differentials between these two things in history. We don't see that usually. You want to follow equal weighted commodities, and because they usually signal that there's more ahead for oil. And yeah, I'm very bullish oil. I think that the whole geopolitical risk has been priced out of that commodity. I think there's plenty ways to consider the fact that we may see a substantial increase from current levels today. And I have my favorite play too. Petrobras
Yeah.
almost like fits
Yeah.
everything to me. Like if it's emerging markets, if it's the story of Brazil, if it's oil exposure, if it's high quality assets, yes, it's a state-owned company, but if you have a major shift in politics, of the which we're seeing in every country in Latin America today, that just, it's just it's a perfect play in my view. And this is why I'm overly bullish that stock in particular.
Okay. Well, it looks like people should pay attention to it because that was one nice move out of the base. And I was going to get to talking about the dollar, but the natural gas play, at least there are some people that believe that, it's the bridge before nuclear to
Yep.
power AI centers. And I wanted to ask you, another out of favor group that is coming out of the hole that looks good to me are grains.
Mm-hmm.
Are you paying attention to the grains at all? I mean, you're a miner. Can you put on a farmer's hat for me, Tavi?
No, I love the grains as well. And
Okay.
what is historically speaking, um, when you are in an inflationary era, and just going back, because I will touch on the grains as well, but going back to the Brazilian story I shared, the
Okay.
lesson is not the fact that we had to, no, that my dad specifically had to hedge its currency exposure with a material that usually depreciates in value. And we actually saw him making money in that environment. It's nothing to do with that. The lesson is that throughout the subsequent years, I guess, what we saw was that inflation stayed ingrained in among consumers and how psychologically they make decisions and so forth. And I find it fascinating how in America people think that inflation is just magically going to go away. And once you get that, toothpaste out of the bottle, it is
No.
very difficult to get it back. And so I am of the view that this is a problem for the long haul. And going back to your grain question, when you study inflationary eras, it's not just metals that work. I mean, I love metals, don't get me wrong, I'm not changing that view, but grains worked incredibly well during that time.
Sure, beans in the
Energy,
teens. Yeah.
energy did very well in that environment. So when you find a period where you establish an inflationary era, and you know that there's demand factors that are far beyond more powerful than the supply itself, of which is extremely constrained for lots of reasons. And then on top of it, you throw deglobalization to a degree that we haven't seen in decades. Um, you have to say that we're at least favorably pointing towards in commodities bull market. In a commodities bull market, it's not like all commodities go up all at the same time. They rotate among
Yeah,
themselves,
they're like the market as we rotate from
sector to
tech.
sector. Yeah.
Yeah, it's the same type of trading activity.
Or within sectors, there are companies that will be leading versus others and so forth. Now we have NVIDIA, Palantir, and then switches to
Yeah.
another. And it goes like that all the time. Before we had Amazon and Facebook and so forth. But the point of this is when you acknowledge, so if you're at that view and you acknowledge that you are at that sort of stage where some of these commodities are, out of favor, and you have a high conviction that you are in a commodity bull market, it's sort of that discipline needs to come in to play. And despite not being as enjoyable investing in things sometimes when they're coming down, for me, it's actually I have joy doing that for whatever reason, but I don't mind going against everybody else. But I do know that most people have that issue. You have to think of that as discipline. It's like, all right, let me just put some money here, just because I understand that this is going to rotate. I don't feel confident just yet, but I should put at least a little bit of money there and rebalance my portfolio a little bit. So if there is really a rotational story happening, of which I'm a firm believer of, that's going to come back. And so
So
to your point, yeah, grains
yeah,
are very bullish. Yeah.
that's a great point. So here's a guy who manages more money than me. I'm a thousandaire. Anyway, that you put out feelers in a sector and then await confirmation of your idea, but know when it's out of favor that you want to, because if you have a feeler on it, you pay more attention to that trade, don't you?
Yeah, it's normal. All of us want some sort of, you know, confirmation to our thesis. And the real money is made even before that, but that's, for if you're just like you do, usually technical analysis, of course it's a different approach towards investing in a lot of ways. And that doesn't mean it's a bad way or a good or mine is a better way. That no means I'm saying this. It really
Right.
depends on how you sleep at night. So it comes down to that.
Exactly.
And so
That's all leverage. It doesn't
yeah,
matter what you're buying or selling. It matters if you have leverage. For example, all the people who had leverage on altcoins when we got that crash in Bitcoin, they're
yeah,
gone. They're gone because they
yeah.
leveraged up. They could still be in the trade if they hadn't have been aggressive and just been conservative.
To your point on leverage, it's one of the greatest things about finding a contrarian case to be supportive of, either on the long side, especially on the long side, because your gains are unlimited, basically. Um, what I find it attractive about that is the fact that there is no need to take leverage on that, right? I mean, the leverage itself is embedded on the trade because it's so contrarian. Um, I like that a lot, actually, and this is why I don't mind, yeah, you don't get paid for, this is not a test where there's a teacher, a professor trying to figure out if the more complex of the investment case you find, the better the points you're going to get. This is not the idea at all. Uh, but when you can find a legacy industry like grains, like mining, like oil, you can go deep into very different ways of finding legacy sectors of the economy that they're not going to go away. And you can find these dislocation periods in the market that people are just, overwhelmingly bearish for whatever reason. That's when you need to come in with a little more strength of a view. So
Okay.
yeah, I don't know. I mean, I could be very wrong, and I've been wrong in many things. But to me, we've seen the gold market move. We're seeing the metals, the derivatives of gold. Now it's started to outperform gold, which is what you
Yeah,
touched on at the beginning. Very
the
attractive.
shares. Yeah.
We're seeing emerging markets do very well versus S&P 500, which is something that I think was the trade a year ago. And I think that trade today is oil, in my view. So
Okay. Yeah, that's a secular shift they say happens only once every 20 years.
on what? Sorry.
The movement of flows out of the U.S. to international markets. This is the first time it's happened in a big way in 2 decades.
Yeah, and I think the way people characterize this shift is as if it's magically happening. It's not magically happening, guys. Just like
It's money
study.
flow.
It's like if the gold market goes, it's a matter of time for people accepting risk in the gold market to look for derivatives of that trade. You make money on Bitcoin, you're like, all right, what's next here? And it's normal to go down and start looking for higher risk, higher leverage, higher volatility. And you want to kind of want to double down on that thesis. And this is why miners are doing so well. It's not magic. Gold has done very well, and you would expect that miners would do very well too, at some point. And now here we are.
Oh, yeah.
And it's funny
Right.
because the miners, coach, was interesting how it played out, and it's still playing out. It started with the guys that do their homework, right? The Agnicos of the world
The blue
and
chips.
Lundins, or actually the high quality blue chips, I'll call them.
Yeah.
And then you had some of the laggers that are also blue chips, but that the industry knows well that they're just have lacked vision for a long time. They have, just made lots of mismanaged decisions, such as Barrick would be a great example. And when I saw the divergence between the two, I was like, well, that's not going to last. There's no way everyone's just going to pile on all these, you know, Agnico and other companies that are doing very well and just forget about the Heclas and the Barracks of the world when they're all on the verge of a major breakout. So,
Yeah.
I don't know if you followed stuff I was very clear. It's like this is going to spread. This is contagious. This is not going to stay just in the guys that do their homework. It's going to spread to the lower quality guys too. And it did. And I think we're in the process of seeing more of that. This is not
Yeah.
done. You go
Yeah.
down the pipe now. You go down to the smaller names and so
The interesting part of the miner trade was I actually did a piece, a podcast entitled "Even the Gold Bulls Hate the Miners." Because
so
we were
true.
there. They'll never perform. You're just throwing your money away. Just buy the physical metal. It's a terrible business, right? We heard all of that
Oh yeah.
at that bottom. I know you pay attention to currencies,
Hmm.
and with your narrative about a weaker dollar,
Hmm.
to me, the most contrarian trade in currencies on the board
Yeah.
is being bullish the yen or
Hmm.
bearish US dollar yen.
Yeah.
And everyone's in total agreement that the yen's going to 160
Yep.
because of the new political leadership, and they're dovish. But uh, I think that if Japan and the US are cooperating, the US isn't going to like a 160 yen, are they, Tavi?
No, no, I totally agree with you. And I think you want to look at this. Um, I was looking at that trade too, and I've been waiting for it. I missed this turn in the dollar here recently. And the reason for it, I just like to see kind of that exhaustion where people are just like overwhelmingly bullish in the dollar and so forth before I really jumped in. the DXY index has been mostly driven by the yen. So why not just focus on the yen? The euro has actually been a lot more resilient than the yen trade, and I think for the reasons you just said. And I think that's a great way to think about it. It's another derivative of the gold trade that people don't think about it is the depreciation of the dollar itself. Is usually the dollar enters a multi-year decline versus other fiat currencies. Now, then you have the crazy people that come out and say, well, this is the end of the dollar. That's not the end of the dollar, guys. I mean, that's really not what's going on. It could be the end of the dollar in 20 years from now if something crazy happens. Let's not also take that outcome probability out of the equation, but that's probably not where you should be focused on. You should be focused on the fact that we have a major trade deficit. You look across the globe, and there are some countries that are currently have a major supply in terms of trade with the US. If the US wants to fix that, how do they do it? They go deep into those agreements and try to fix them. Logistically, that's really hard. So historically, what we tend to see is that there's an adjustment of the currency. So, back when Nixon came in play in the 70s, and he was also being questioned by the court regarding the tariffs that he wanted to impose and all these things. He basically made a case for calling it the balance of payments crisis, that we need to do this for the country to survive and all these things. And he was successful with that. The reason for it is because not because he put all these tariffs to fix the issues. No, no, no. Immediately what he did was actually with Japan, Coach. In fact, they appreciated the Japanese yen by about 30%. And guess what? That cleaned up most of the issues that they have. So I think you were right about focusing on Japan, particularly with this price behavior we're seeing, which seems very extreme. You can look at the Canadian dollar at times. You can look at the Mexican peso at times. These things have a very strong, very high surplus with the US. And these things are going to have to be adjusted at some point. And I suspect that the adjustment will come mostly on the currency side. And so I think we're absolutely right to focus on those instruments.
Thank you for giving me an even better narrative than I had
Yeah,
about
you did
U.S.
great.
dollar yen. I do want to ask you about a couple of things. I want to wrap it with is Michael Burry right?
I've
What do
been
you
wrong
think?
on this as well, as you know well. Which, the way I approach these things is I look at the premium that you pay to insure your portfolio. How cheap is it? It's kind of like oil. How cheap is it relative to what could happen? And
It's
people kind
cheap,
of,
isn't it?
it's very cheap. And so, yeah, he could be very right. And I would not. It's funny that he's being characterized as this, terrible trader. And I think that
Yeah,
couldn't be further from
like
the
a
truth.
villain.
Yeah, no, he's a very smart trader. He got the gold trade right. He
Yeah,
was very bullish gold. He got the Chinese trade very right. He
yeah,
was he was one of the guys that had plenty positions of large cap, mid cap Chinese names, but way before everybody else. He
right.
got that almost precisely right. And I don't know. I think he's onto something. And no, I don't know. I mean, sizing positions to the level that he did. I don't know what type of
Yeah,
options he's playing here. So I
yeah.
don't know exactly what he's doing. It's tough to.
But directionally you agree. And he thinks there's even the potential of fraud within these. And I don't know if you saw CNBC, but after
Yeah.
it became they announced it, the CEO of Palantir came out and protested. And to me, that made me think of Shakespeare. Me thinks you protest too much.
Hmm. Yeah, it's very possible. I have not done my homework to the degree
Yeah,
that he has done to claim that it is a fraud or something along those lines.
yeah,
What I would
yeah,
say is, look, things are frothy, things are expensive. Should be normal for investors to look for a rotation out of this sector, specifically technology, into other things that look more, fundamentally cheaper and makes more sense. I think there's going to be a rotation out of tech into other places. Doesn't mean it's the end of tech, but yeah, things look very frothy, and it should be if we have a correction of 20-30% and you call me to, were you surprised? No, I was not surprised. Am I playing this like it's, am I going to die on this hill if that doesn't happen either? No, I've got other things going on. I learned my lesson that I think most of the money I'll hopefully make in my career will be on the long side. And so I focus like a laser on that. But I don't want to be caught on a, uh, a problem in a bubble or anything along those lines like that. And I don't think we are there in resource industries, but certainly we are in the tech sector. So
Yeah.
when does it pop? Your view is as good as mine, but I think directionally he's right.
Okay, I have an 8 ball. You ever see those, Tavi? And you shake it and different answers come up.
Oh boy.
Yeah. Anyway, I tell you what, it was a great interview. I always learn from you every time we
Oh,
talk about something, especially, if I bring up something that I see technically and I think about, will Washington be happy if this continues?
yeah.
It was a great discussion on that, and congratulations on your longs. And also, you give me conviction to be looking for important buying opportunities in oil. It might be a 2026 story,
Yeah.
but you don't have to wait to, like Tavi does, put a
Mm.
feeler in the market when things are out of favor and just let it develop. And the price action or what's developing will give you more confidence to build it.
Yeah. Coach, you're absolutely right. I just want to say this to anybody who's watching. I mean, I didn't time the mining space perfectly either. I mean, if you want a perfect timer in terms of market, do not listen to me at all. I love, a guy who you know, I really admire is Sam Zell, and he died recently, but
Yeah.
he to me was exactly what I want to be in terms of professional success. He knew exactly how to transition from an industry to another industry way before everybody else. And it's okay to be early in that point. I know a lot of people say being early is being wrong. If I can make access of my investment, I don't mind being 30% down, 20% down on an investment, a single investment I made. It's part of the game. I'll add more. I'll get my average cost low. If the thesis makes sense and I get multiples out of that investment later, hey, that's what I'm here for. And I love it. And so, yeah, that's the way I view this. I don't know if energy changes this week, next month, but I have that feeling that given what we are, it wouldn't shock me at all to see energy prices substantial in a very different environment 12 months from now. Maybe we can do an interview 12 months from now, or we can do it earlier too, but 12 months from now to check on that thesis, because I have a
Okay.
feeling in the next 12 months we're going to be in a different place in energy.
I concur. Do you know what Sam Zell's nickname was?
No.
The Grave Dancer. You like that?
Yeah, have you read
Yeah.
his book? His
No, but I'm going to. But that's where he made all his money. He was the ultimate contrarian.
yeah,
He would buy bankrupt properties.
yeah.
When people failed, there he was. And scoop assets up cheap. But that's a pretty good nickname, the Grave Dancer.
Back in 2021, I believe I had a chance to pitch what we were doing to him.
Huh.
And I had a Zoom call with him, which was one of the scariest Zoom calls I've had in my career. And I was like shaking to speak with him because I admire the guy. And it's weird too. I've met a lot of people in the industry that I admire in the past, of which I was shockingly, not surprised by not seeing the level of intelligence I thought I was going to. And with him was the opposite. I thought the guy was way higher than I thought. And after pitching and getting questions back and forth and so forth, at the end of it, he said, "Look, let me tell you something. This is not for me, but I think you're onto something, and I really think this is likely to work. I'm not the guy that will expose my portfolio into this because I just don't know what I'm doing. but I can see where you're going, and I think you're way ahead of the curve. This is in 2021. And so I appreciated that a lot, and that kind of gave me conviction to stay on
Yeah.
in game. So
Wow.
so yeah.
Great Sam Zell story. I'm glad you brought it up. And yeah, look, we all get a little nervous in front of someone that we have admired for years that are really legends. So, people have called me a legend, and I go, yeah, a legend in my own mind. But anyway, Tommy, it's so great to see and talk to you. Thanks so much for giving your time today to hang out with me for 30 minutes or so.
Always my pleasure. And I'll always be back here. So anytime you want to invite me, I'm here. Thank you
All
very much
right.
for having me. Appreciate this.
All right. Kill it the rest of the year, brother.
We'll do.
Short US dollar yen, it's coming off.
I like
And
that.
I'll see you down the road.
Sounds great. Thank you very much. Take care.
Tavi Costa, everyone follow him on X at Tavi Costa. Look for his spaces on X. He's out there almost every day.
Take
Adios.
care.